Welcome back. Investors may be losing confidence in the United States, may be losing confidence. The dollar, as an example, has been dropping compared to several other currencies since mid-January, declining to the lowest level in 3 years.
And trade with sanctioned Russia is helping China's currency. Reports say Yuan has now become fifth most traded currency in the world. China's currency was up 3 places to number 5 in Bank for International Settlements survey on currency trading.
What if tomorrow China suddenly decides we're done with the US dollar? What would that mean for you, for me, for the world? Imagine waking up to headlines like China dumps dollar reserves or oil priced in yuan now. That might sound far away from our lives, but this shift could reach into your wallet, your job, and even the prices at the grocery store. And now say, let us make a journey. We will see why this idea is not just a myth. It provides an explanation of how the money rules the world, what China is currently up to, and what we can expect in the future. Are you ready? Why the US dollar is more than just paper. The US dollar is more than a currency. It is a form of control. Over 80% of world trade is done in dollars today. It is used by countries to purchase oil, food, metals, and other necessities. Indeed, almost 60% of the foreign currency reserves that countries hoard in case of emergencies are saved in US dollars. So why do so many nations have faith in the dollar? The answer is stability. The United States is characterized by strong rules, credible banks, and a history of debt payment. Investors are safe investing in the U.S. Treasury bonds, which are IOUs of the U.S. government, because they believe the U.S. would never default on paying them back. To this trust, the U.S. can find it easy to borrow money and undertake major programs, including infrastructure and defense. World tensions have not affected the preference of countries to the dollar. It is during the times of crisis that people and countries run away, but not to the dollar. It is considered to be a safe place to keep money. But this confidence is based not on magic, but on mechanisms. The dollar can lose its status when the world starts to doubt the US, its politics, economics, or leadership. And China spies its chance there. China's growing power and the dream of the Yuan. China is not just a factory of the world anymore, it's now aiming to control how the world does business. China trades with more countries than the US and has huge projects like the Belt and Road Initiative, which links Asia, Africa, and Europe through railroads, highways, and ports, all funded by China. This gives it a strong voice in global affairs. But China doesn't just want to trade goods. It wants to trade in its own currency, the yuan. Right now, only about 2% of global reserves are held in yuan. But China is working to change that. It signed trade deals with countries like Brazil and Russia, allowing them to skip the dollar and use the yuan instead. Some oil deals are now priced in yuan too. They're even experimenting with a digital yuan, a kind of high-tech currency that could make trading even faster. It's part of a long game. China is slowly offering the world a plan B. Use our money and escape US pressure. Still, there's a challenge. The yuan is strictly controlled by the Chinese government. It's not easy to exchange it freely, and investors don't have strong legal protections. Trust takes time. And while China is ambitious, trust is what the yuan still lacks. How global trade could shift without the dollar. If China ever fully replaces the US dollar in global trade, the change wouldn't be small, it would shake the entire system. Right now, most oil, metals, and big international deals are priced in dollars. If that shifts to the yuan, companies and countries would have to adjust. That means new contracts, new banking systems, and even new rules. For example, imagine a country buying oil from the Middle East. Today, they need dollars. If China's yuan becomes the new standard, that country would first need to exchange its local currency into yuan. It sounds simple, but it's not. Currency values change daily, and if the yuan isn't easy to trade, it could cause delays and extra costs. Also, banks around the world are built around the dollar system. They have software, experts, and habits that focus on dollars. Switching to yuan would mean retraining staff, rewriting code, and managing risk differently. For some, this might not be worth it. Still, the shift is starting. Some countries are making small trades in yuan. Over time, more might follow, but only if they trust China to keep things stable. That's the biggest barrier right now. Why some countries want to ditch the dollar. Some countries are tired of the US having so much control. When the US puts sanctions and punishments on other countries, it often cuts off access to dollars. This can freeze bank accounts, cease trade, and hurt economies overnight. Countries like Russia and Iran have already experienced this. For them, the dollar is not just money. It is a weapon. That is why they are turning to China. China promises not to interfere. Their message is simple: we won't judge. Let's just do business. Though that sounds very attractive to leaders who don't want to follow US rules. But it's not just about avoiding punishment. Some countries want more independence. If their money system depends on the dollar, they're always vulnerable to changes in US politics or the economy. By using yuan or their own currencies, they feel more in control of their future. This is why we're seeing quiet moves. Deals between China and Brazil or Russia and Iran are small steps in a bigger plan. Reduce dependence on the dollar. These changes won't flip the world overnight, but each new agreement is like a small crack in a giant dam. One day, those cracks might break the structure completely. The silent threat: China selling US debt. Here's where things get even more serious. China owns hundreds of billions in US debt. This debt stems from treasury bonds, essentially loans the US has taken from investors. These loans help pay for everything from roads to military programs. For years, China bought a lot of these bonds. Why? Because they were safe and gave a small return. But now, China is selling. Slowly but steadily. And that could spell trouble. If China dumps too many bonds at once, the value of those bonds drops. When bond prices fall, interest rates go up. That means it gets more expensive for the US to borrow money. More expensive debt means more taxes or less money for public services. Also, if the dollar weakens, it costs more to buy goods from overseas. Think of your phone, gas, and clothes. They all might cost more. A weaker dollar affects real people, not just bankers. Why is China selling? Partly because it's funding its massive Belt and Road projects. Also, China wants to rely less on the US. Instead of holding dollars, they're stacking gold and strengthening ties with countries that want alternatives to the US-led system. Can the yuan realistically replace the dollar? Replacing the US dollar isn't just about ambition. It's about meeting some tough standards. The dollar is trusted because the US has a stable government, a strong legal system, and open markets. Investors know their money is safe and can be moved easily. Can China offer the same? Not yet. The Chinese yuan isn't freely traded like the dollar. The government tightly controls its value, which makes other countries nervous. What if China suddenly changes the rules? That's a big risk for banks and investors. Also, China doesn't have a bond market as deep or as active as the US. When investors want to buy or sell fast, they need lots of buyers and sellers. Right now, China can't offer that scale or speed. Plus, many worry about legal rights. If a business deal goes bad in the US, there's a fair court process. In China, courts often favor the state. So, while the yuan is rising, it's not yet ready to replace the dollar. China is pushing hard, but until it offers more transparency and freedom, most of the world won't fully switch. What happens to the US? If the dollar loses its crown, the US dollar isn't just a currency, it's a superpower. Right now, the US can borrow money cheaply because everyone wants to hold dollars. That means low interest rates and more spending power. But if the world gets away from the dollar, the game changes. First, the US government would face higher borrowing costs. More money would go to pay interest, leaving less for schools, healthcare, and infrastructure. It is like having a credit card bill that suddenly triples. Second, the US might lose influence. Today, when the US speaks, other countries listen, partly because the dollar backs up its voice. If that power weakens, other countries, especially rivals like China or Russia, could gain more control in world affairs. Third, every day Americans might feel the pain. A weaker dollar means imported goods, electronics, clothes, and food cost more. Inflation could rise. That's more pressure on families already struggling with costs. Losing dollar dominance wouldn't destroy the US, but it would reshape how it lives and leads. It's not about panic. It's about preparation. What about gold? Is China replacing dollars with it? While the world watches the dollar and yuan, China has been quietly collecting gold. And lots of it. Why? Because gold is safe. It doesn't depend on politics or policies. It holds value across borders and crises. For a country planning big changes, gold is a solid backup plan. Over the past decade, China has boosted its gold reserves in a big way. Reports suggest they're now one of the largest holders on Earth. They're buying gold from mines inside China and from other countries too. They're even letting citizens invest in gold more easily. This strategy has two goals. First, protect their economy if things go wrong with the dollar. Second, build trust. If the world sees China as having strong reserves, both in currency and in gold, they might trust the yuan more. It's not that China is trying to use gold instead of money, but gold gives them more confidence to challenge the dollar. It's like having a safety net while walking a tightrope. If they fall, they don't crash. They land on gold. Is the dollar already losing its power slowly? While the dollar still dominates, there are quiet signs of change. Countries are slowly starting to use other currencies. Russia and China now trade in their own money. Brazil and China signed deals to skip the dollar. Even Saudi Arabia is discussing selling oil in yuan. These changes are small now, but they're growing. Like a slow leak in a tire, the pressure is building quietly. Some countries are doing this to escape US sanctions. Others want more control over their own economies. They're tired of relying on one currency to run the world. The dollar won't disappear overnight, but its hold is getting weaker, one deal at a time. This isn't about a sudden crash. It's about slow erosion. That's why economists say, watch the small tremors, not the earthquake. What should we watch for in the future? So, what's next? How can you tell if the world is really moving away from the dollar? Watch who's trading in what currency. If more big deals start using the yuan, that's a sign. If central banks start storing more gold and less dollars, that's another. If China opens its markets more and removes capital controls, it means they're getting serious. Also, keep an eye on global alliances. BRICS is already planning its own currency. If they succeed, that could shake things up. For now, the dollar still rules. But power doesn't always leave with a bang. Sometimes it just walks away, quietly, step by step. Stay alert.